Hi, I'm Paul Bagnall. Welcome to Market Call today on BNN Bloomberg. Brian Madden is our guest today, Chief Investment Officer at First Avenue Investment Counsel. He'll take your questions on North American stocks. So pick up your phone and call us at 1-855-326-6266 or email us at marketcall@bnnbloomberg.ca. We'll get Brian to answer your questions in the the second segment of our show. In the meantime, we'll welcome Brian to the show and ask him what his take on markets is. So welcome, first of all. We're about halfway through earnings season in the U.S. Some big companies are reporting this week. People are talking about Alphabet, Microsoft, and Amazon, among other things. What's your take on earnings season so far?
Yeah, so far so good, Paul. Obviously, we'll see what the other big Magnificent Seven names report, but Alphabet got things rolling nicely last night. But broadly, we've got, I think, 250 or 260 of the S&P 500 constituents that have reported their third quarter earnings. And as it stands now, we're seeing earnings for the index in aggregate up sort of high single digits, which is pretty good, all things considered. And by and large, companies are reporting better than expected results. So, off to a good start here. Canada, it's still early days. Not too many companies have reported. We're always a little bit slower out of the blocks. About 10% of the TSX constituents have reported, but the early results are showing some more difficult earnings comparisons, and so Canadian companies in aggregate are lagging their U.S. counterparts this season.
What do you expect the tone of markets to be after the U.S. election this coming next week?
Yeah, of course, this is the elephant in the room, and that's not a nod to the symbol of any particular party, but obviously a topic of great intense focus and conversation. We think really the election is kind of a fade. It's something to talk about, but broadly, both candidates are running not identical, but sort of from an economic standpoint, similar campaign platforms, which is to say, and not mincing words here, very fiscally undisciplined. So from a stock market perspective, from a corporate earnings perspective, that's going to be pro-growth if you run big deficits and stimulate the economy with fiscal policy. And both candidates are sort of on the same page there with some subtle variations. So that should be good for growth, albeit, of course, at the expense of long-run fiscal sustainability. So it's kind of a kick the can down the road type of a regime thereafter. And the medium-term implication probably being that we'll likely have higher than would otherwise be the case inflation and interest rates. So broadly, after the election, we expect a lot of this anxiety to dissipate. There's a lot of speculative positioning in the options market with people putting on hedges. And so, we think the election will come and go, hopefully peacefully and quickly, and not weeks and weeks of recounts. And then we'll get into a seasonally strong period in December, which, in our opinion, Paul, should sustain the very strong rally we've had in stocks this year into the year end.